I'd like to share with you my top 8 ideas for stocks that you may consider now in January 2021. Hello everyone and welcome back to Investing with me, Antoaneta. In today's video, I'll give you my 8 stocks for January 2021. Some of these companies we've already discussed here on the channel, some of them we haven't, and I just mentioned them, but if you stay with me till the end, you're gonna have a bonus tip as well. Another company that I'm considering to buy, something very new for me. These videos take at least a couple of hours to prepare, so I can't always publish a new one as soon as the market changes. But I try to give you some ideas when it's possible. So, as you know, I'm interested in business and motivation, so not all my videos are about investments. So, I really hope that you like these videos. Just press the button like, because it's really important for the YouTube algorithm and to keep motivating me and my team to create these videos for you, because it does take a lot of time to prepare them. And I'll really appreciate if you like the video, share and comment as well. Today we're going to cover the following 8 stocks: Dropbox, Zoom, the TTCF, Berkshire Hathaway, Appian, Fiverr, Shopify, Pinterest. These are my favorite companies that I actually own all of them. And if you stay with me till the end, I will be giving a bonus tip, as I already mentioned, and this will be a new company that I haven't invested and I'm considering to add some of the shares from this company. Now, let's start with the first one, Dropbox. You know that recently, for the last few months, I've been talking about Dropbox. Dropbox, ticker symbol DBX, is a California-based company that provides cloud storage solution to people worldwide. Under Drew Houston leadership and Ajay Vache, Dropbox managed to become one of the most valuable startups in the entire world. Current price $23.35, market cap 9 billion, and EPS is 0.1. Now, it's very interesting why I like this company. So I'd like to share with you why I consider this company that's worth investing. I see a ton of potential in Dropbox, and especially when remote work gaining popularity as a result of the lockdowns. I believe that they will continue growing in the future. I don't think that remote work will stop once the restrictions are lifted. People are now seeing the massive benefits and flexibility this can bring, both for the companies and the employees, and the trend is likely to continue post-lockdown. So I'm really confident that this will continue. My second company is Zoom. I invested in Zoom back in January, I added in March, I even sold some of my Tesla shares back in January to buy Zoom, because I really believe in Zoom so much. Zoom Communications, ticker symbol ZM, is one of those companies that actually benefited from pandemic in a big way. Under the leadership of CEO and founder Eric Yuan, Zoom Video Communications became one of the leading providers of voice over IP communications for 2020. We've already discussed Zoom and its management on a couple of occasions, so I'll leave a link to the video in the descriptions for another videos that we actually discussed this company. Now, the current price is $337.71. I'm recording this video on 12th of January. PA ratio 238, market cap 98 billions, and EPS 1.44. Now, why I really like this company, why I think you should consider to invest in this company. This is something unique, and I always, even now, there is a dip and we can see that it's going down. I am so confident, and I'm not selling anymore because back in May I saw some of Zoom because when went madness and crazy and I had this really good return, I decided to sell a little bit. I always sell a little bit, and I always buy a little bit by every month. Zoom had an incredible year. During the lockdowns, they grew in popularity, dramatically increased their user base. They went up to 433,700 customers with 10 or more employees, and their numbers for the third quarter surpassed even the most optimistic expectations. Analysis expected Zoom to hit about 693 million in revenue, 316% increase at roughly 0.92 a share of adjusted earnings. Instead, they scored $777.2 billion in revenue, 367%, at 11 times increase. I'm very optimistic about this company's future, and I look forward to adding more Zoom shares maybe in my portfolio because I think I've got enough shares, but maybe I will add again more. Tattooed Chef. I spoke about this company just a month ago. Ticker symbol TTCF is shaping up to be the next big thing in the meal replacement industry. We recently had a look at Tattooed Chef, and while things haven't had the time to change drastically since then, things are definitely looking up for some Galate's business. The statistic is current price $23.94, market cap 1.5 billions. And why I like this company, the COVID pandemic may have slowed down the buzz around climate change and the overall push for sustainability, but the market for plant-based meat substitutes remains mostly untapped. Personally, I expect to see some Galate's over 35 years of experience in the food industry paying off big time. My next company, my favorite Warren Buffett, Berkshire Hathaway. Berkshire Hathaway, ticker symbol BRK-B, is Warren Buffett's company. Now, as you all know, I'm a big fan of Buffett. And I've done a bunch of videos talking about him and his company and his strategies. So my recommendation here shouldn't come as a surprise to you. Current price is $233.43 per share. Market cap is 549.381 billions, and EPS is 22,232. So, next one we're going to talk about is Appian. It's a company that I started adding back in April. Appian, ticker symbol APPN, is a cloud computing software firm based in Virginia. Their services play a key role in a mobile app development for businesses. With just over 20 years in business, Appian's 1,400 employees provide platform as a service to companies on the international market. The company is currently headed by Matt Calkins, one of the 4 original founders, who managed to turn Appian from a small startup into one of the world's most successful software IPOs for 2017. Current price is $147.55, market cap is 10 billions, and EPS is minus 0.56. In 2020, Appian had a revenue growth of over 17% year to year, ending up at $77 million for Q3. Their cloud subscriptions went up by 40% with a revenue of $34 million and a cloud subscription revenue retention rate of 115%. Gross margin went up to 73%, up from 64% the previous year, and their cash revenue ended up at over $250 million. Why I own Appian, and why I like this company. Mobile devices are now the preferred way to access the internet for most users, and pretty much all companies are turning to mobile applications. Even my cleaning business has its own mobile app, and we've been getting excellent results and a lot more engagement with it. I expect to see mobile apps becoming the norm for all businesses and the near future, and this is exactly what Appian brings to the table. Add to this the fact the company founder and CEO Matt Calkin still owns over 40% of all Appian shares, a bit over $2.8 billion at the moment, and that the company is still in its early chapters of development, and you've got yourself one incredibly promising business. Fiverr, the ticker symbol FVRR, founded 11 years ago, and is an online marketplace where freelancers can offer their service for as little as $5. Hence, you can see the name. Or that was the original marketed intent, at least. Today, the platform is home to numerous projects, some reaching well into the 4 digits. The demand for professional services is growing rapidly by the minute, and the platform profits massively. Add to this the boost that the pandemic and lockdowns gave to digital services, and Fiverr turns into a really lucrative investment. Current price $232.19, market cap is 8 billion, P/E ratio is 734.35, and EPS is minus 2.29. During Q3 of 2020, Fiverr demonstrated a revenue growth of 88% year over year. This is amazing. Their active buyer base increased by roughly 30% since the end of last year, and the average spending per buyer went up by 15%, currently at $195. The management has also shifted its strategy to try and accommodate the growing demand of larger businesses, pressured by the lack of in-house staff during the lockdowns. Why I like this company? Fiverr is one of not the most popular online marketplace for digital service, right up there with freelancer.com and Upwork. I've got investment in Upwork, and I really double my investments, and I'm quite happy. And I added a little bit of Fiverr a few months ago. So, however, the easy to use interface and a much lower entry barrier make it the Fiverr the go-to choice for most service providers. And while Fiverr's revenue growth originally happened due to the lockdowns, it also earned them even more popularity and recognition as a global marketplace. One of my other favorite company that I bought quite a few years ago and then I sold and I started adding again this year is Shopify. Shopify, ticker symbol SHOP, is a leading online e-commerce platform used by online stores and point-of-sale systems. The systems allows a complete service suite with payments, marketing and shipping and engagement tools. If you've ever bought something from a website, you've most likely used the system already. Current price is $1,117.75 per share. Oh, when I bought it was £300 a few years ago. It's really our happy days, but obviously now you can see the price, and I'm still considering, and I actually bought a few shares yesterday. Market cap is 145 billion, P/E ratio 734, and EPS is 1.62. Why I really like this company, why is on my list. So Shopify founder and CEO Toby Lutka is a big believer in entrepreneurship and say that his goal is to help people change their lives for the better by starting their own business. And I love that. As an entrepreneur myself, I find this message really admirable. And I also use Shopify for my own projects, of course. Looking at the results that he's been able to deliver by working towards achieving his mission, I can't help but believe in the company's future. We use this for Yuko Bravo, and I love it because it's much affordable, it's much better compared to promote yourself on Amazon and pay their fees. Next one is Pinterest. Pins. Ticker symbol pins. P-I-N-S. Is a social platform and used by people for sharing pictures and by businesses for SEO and advertisement. Now, don't get me wrong, their business site looks great, but the platform itself isn't something that I personally use for non-commercial purposes. Then again, we are here to look at the financial side of things, and on that front, Pinterest is looking up really, really good. Now, the current price is 71.70. Market cap 44 billions, EPS minus 0.60. But why I really like this company? I have invested in this company and I've got already good return. So now, like most social networks, Pinterest profited from the lockdowns in a big way. When everyone was mostly stuck at home, they turned to the image sharing platform for closer. Pinterest saw an average monthly user increase of 37%, totaling 422 million for Q3 2020, and a 58% increase in revenue, $433 million. And while there certainly is an air of uncertainty around the platform, partly due to Facebook's involvement and partly because there is no way to tell if they will keep growing post-lockdown, I believe that Pinterest presents an excellent long-term investment opportunity. I would like to say that we are reaching our end of the video, and for those people that have stayed with me till the end, I've got a big bonus just to say really thank you for being with me, and this is my bonus for you. A company that I haven't invested yet, but I'm really considering to add to my portfolio. Okta, ticker symbol OKTA, is a cloud-native software company specialized in identity and access management. The lockdowns caused a huge increase in demand for competent cybersecurity implementations, and Okta was there to deliver. Since January 2018, Okta has managed to return over 700% for investors, and they just now getting started. Currently, the company is sitting at just over 9,400 customers, and they are positioned in a market with a very high demand and a low supply. Current price $252.20, market cap 32 billion, EPS minus 192. For the Q3 2020, Okta managed to gain over 400 new customers, including 6 contracts valued at over 5 million and 21 contracts in the 1 to 5 million range. They also recently opened a new office in Japan. Why I really like this company? Why I actually consider to add as a new buy in my portfolio? Okta estimate that the workforce identity total addressable market is around $30 billion, while the customer identity market is about $25 billion. I expect to see some fantastic things from Okta, both in the near and in a distant future. So, and with this, we finally reach to the end of my top 8 stock suggestions plus 1 bonus for January 2021. Putting all of this together definitely took a longer time than I expected, and I already made the list for my personal investments long before I sat to work on the video. So I would really appreciate a like or maybe even a share if you enjoyed the video. And I would really say a big thank you for sharing your time with me to watch my video. So thank you very much. I would like to hear what do you think about my ideas. Have you invested in them? Are you considering investing in them? What is your ideas to invest into in January 2021? Are you beginners? If you're beginners, you can watch some of my videos and just start it. Just don't even think about twice. It's not so difficult. All you need to do, watch some of the videos that I explain. I'll give you a guide step by step how to start investing in the stock market. And yes, thank you very much, and see you next time. Stay motivated.